Hello, investors, and welcome to Stock AI Insights. I'm your AI host, and today we are breaking down a fascinating piece of research from Morgan Stanley on Google's big play in the AI chip race. We're going to get you the key financial insights in just a few minutes. Okay, here's our game plan for today. We'll start with the AI chip shakeup, then dive into Google's major power plays. After that, we'll explore the ripple effects for the key companies involved, look at the bigger picture of the shifting industry, and wrap it all up with an investment action plan. Let's get into it. All right, first up, the AI chip shakeup. For what feels like forever, one company has completely dominated the AI hardware world. Well, that's changing. A new challenger is stepping into the ring, and it's starting to make some waves. So the big question on everyone's mind is this. Is NVIDIA's dominance coming to an end? For years, they've been the undisputed king of AI hardware. But now we're seeing two massive deals that are posing the first truly credible threat to their throne. And the catalyst here? It's Google's custom silicon, their tensor processing units, or TPUs. The crucial point is that Google isn't just keeping this powerful hardware for its own products anymore. They're now using it to compete for some of the biggest AI workloads on the planet, and that's shaking things up. So that brings us to Section 2, Google's billion-dollar power plays. Let's get into the specifics of these two deals because this is where the story gets really, really interesting. And things are moving fast. Look at this timeline. It all kicked off in October 2025 when the Anthropic partnership expanded. Just a month later, we hear reports about negotiations with Meta. The real impact is expected to start in 2026 and could get even bigger from there. So let's talk about deal number one. This is the confirmed one with AI leader Anthropic. They're making a huge commitment to Google's platform, planning to access up to 1 million TPU chips to train their Claude AI model. That is a massive vote of confidence. And let's be clear about the scale we're talking about here. This deal is valued in the tens of billions of dollars. This is not some small trial run. This is a massive long-term revenue engine for Google Cloud, and it's the single largest TPU deal they have ever signed. Then there's the second deal, the potential one with Meta, which could be even more disruptive. The really key detail here is that Meta might not just lease the chips. They're reportedly negotiating to eventually buy the TPUs and install them in their own data centers. This would be a first, a landmark shift for Google. Okay, on to Section 3, the ripple effects. When you have moves this big, there are always consequences. So let's analyze what this means for Google's bottom line, NVIDIA's market share, and Meta's strategy. Now look at this chart. The financial implications for Google are just staggering. Morgan Stanley projects the Anthropic deal alone could boost Google Cloud's revenue by up to 9% in 2026. And by 2027, this could be a $13 billion annual business. Just wow. And the market reacted instantly. The day that news about the potential Meta deal hit the wires, NVIDIA stock dropped 4%. Now, while that's just a short-term move, it tells you that investors are taking this new competition very seriously. This comparison really gets to the heart of the technical difference here. NVIDIA's GPUs are the absolute champions for AI training. That's the super expensive process of building the model. But Google's TPUs are custom-built for AI inference, the much more frequent, cost-sensitive process of actually using the model. They're two different tools for two different jobs. Okay, let's zoom out in Section 4 and look at the shifting industry landscape. Because these deals aren't happening in a vacuum. They signal a pretty fundamental change in the market. And here is the key concept for the whole industry. The focus is moving from training to inference. Think about it. You train a model once, but you might use it billions of times. Inference is where the massive long-term volume is going to be, and that is exactly the part of the market Google's TPUs are built to excel in. The Morgan Stanley report uses a really great fun metaphor here. They say, this is kind of like the smartphone chip market. Remember when it seemed like Intel had a monopoly? Then a more diverse ecosystem built around ARM came along and changed everything. We could be seeing a very similar dynamic play out right now in AI. So what does this all mean for your portfolio? Let's get practical with our final section, your investment action plan, and break down the takeaways from the analysis. Let's look at this table. For Google, it's pretty clear this is a major tailwind for their cloud business. For NVIDIA, it's the first real competition they faced, which could mean some market share erosion down the line. And there are even potential secondary winners, like Broadcom, who make the essential networking chips to connect all these new TPUs.
Of course, it's not without risks. The analysis points out a few things to keep an eye on. A broad economic slowdown could hurt AI spending. Google has to actually execute on its supply chain, and the whole industry is always subject to geopolitical and regulatory pressures.
So the key takeaway is this: Google's strategic TPU deals are not just about revenue, they're about fundamentally reshaping the competitive landscape of the AI chip market. So I'll leave you with that question to ponder. Share your thoughts in the comments, and I'll see you in the next episode.